Hello, welcome to American Trader. Today we're excited to share with you an intriguing fast casual restaurant chain stock which we've never covered in this sector before. Since its IPO in mid-2023, the company has expanded rapidly, boasting over 367 locations and plans to grow further. Known for its flavorful menu and focus on customer experience, the company has positioned itself as a strong competitor in the fast casual dining sector, drawing comparisons to industry leaders like Chipotle. And before we get into the stock, for anyone new, make sure to subscribe so you don't miss out on any new content like this, and it really helps our channel. Friendly reminder, we are not financial advisors, so always do your own due diligence before making any investment. Now let's get straight to the stock. CAVA Group Inc., trading with ticker CAVA, operates a category-defining Mediterranean fast casual restaurant brand. The company operates approximately 352 fast casual CAVA restaurants in 25 states and Washington, D.C. It operates in the growing limited-service restaurant sector as well as the health and wellness food category. The company's Mediterranean cuisine unites taste and health, with a menu that features chef-crafted and customizable bowls and pitas. Its dips, spreads, and dressings are centrally produced and sold in grocery stores. Its menu fulfills a range of dietary preferences, from hearty and indulgent to vegan, vegetarian, gluten-free, dairy-free, paleo, keto, and nut-free diets. It serves guests across gender lines, age groups, and income levels. It has developed multi-channel access to in-restaurant dining, digital pickup, drive-thru pickup in select restaurants, delivery, catering, and consumer packaged goods offerings. How the company makes money. CAVA Group primarily generates revenue through the sale of food and beverages at its fast casual restaurant locations. The company's core revenue stream is its in-store dining and takeout offerings, which include customizable Mediterranean dishes. CAVA Group also leverages digital sales through its mobile app and website, capitalizing on the trend towards online ordering and delivery services. Additionally, the company may benefit from strategic partnerships and collaborations that enhance its brand visibility and market reach. Its focus on fresh, health-oriented meals aligns with consumer preferences, contributing to its overall earnings. If we look at the financial summary, CAVA Group exhibits strong financial health with substantial revenue growth, improved profitability, and a solid balance sheet. The company's ability to generate cash flow supports its expansion and investment strategies. While there are areas for operational improvement, particularly in EBIT margins, the overall financial outlook is positive, supported by effective leverage management and cash flow generation. The income statement is very positive. CAVA Group has demonstrated a robust revenue growth trajectory, with a significant increase in total revenue from $500.1 million in 2021 to $963.7 million in 2024. Gross profit margin improved substantially, reflecting enhanced operational efficiency. The net profit margin also turned positive, indicating effective cost management and improved profitability. However, the EBIT margin remains relatively modest, suggesting potential for further operational improvements. Balance sheet is positive, shows a strong equity position with a rising stockholders' equity to total assets ratio. The debt-to-equity ratio is manageable, highlighting a balanced approach to leverage. However, total debt has increased, which could pose future risks if not managed carefully. The increase in cash and short-term investments provides a cushion for financial stability. And cash flow is also very positive. The operation cash flow has witnessed impressive growth, supporting a positive free cash flow in the latest period. The operating cash flow to net income ratio indicates effective cash conversion from profits. Despite substantial capital expenditures, the company has maintained positive free cash flow growth, reflecting disciplined financial management. Earnings call sentiment is positive. CAVA delivered exceptional financial results in 2024, with significant revenue and same-store sales growth, successful market expansions, and strong financial positioning. Despite some cost pressures and moderation in anticipated growth for 2025, the company's strategic initiatives, technological advancements, and culinary innovations position it well for continued success. Record-breaking revenue and growth reported a 36.8% increase in revenue for Q4 2024 and a 35% increase for the full year, excluding the 53rd week in 2023. This demonstrates strong growth in the Mediterranean cuisine category. Strong same-store sales and traffic growth achieved a 21.2% increase in same-restaurant sales for Q4 2024, with a notable 15.6% increase in traffic. Full-year same-restaurant sales growth was 13.4% with an 8.7% traffic increase. Improvement in adjusted EBITDA increased by 60% to $25.1 million in Q4 2024 and 71% to $126.2 million for the full year, reflecting strong operational performance. Strong financial position ended the year with $366.1 million in cash, zero debt, and access to a $75 million undrawn revolver, positioning the company well for future investments. During the CAVA fourth quarter 2024 earnings conference call, the company provided detailed guidance and insights into its financial performance. CAVA reported a 36.8% increase in revenue for the fourth quarter, excluding the 53rd week in 2023, and a 21.2% growth in same-restaurant sales, driven by a 15.6% increase in traffic. The company ended the year with 367 restaurants, marking a net increase of 15 new openings and an 18.8% year-over-year growth. Adjusted EBITDA reached $25.1 million, a 60% increase from the prior year, while net income was reported at $78.6 million, and adjusted net income at $6.5 million, reflecting a 216% rise compared to the fourth quarter of 2023. For the full year, CAVA achieved a 35% revenue increase, opened 58 net new restaurants, and delivered an adjusted EBITDA of $126.2 million, a 71% increase over the previous year. Looking ahead, CAVA plans to open 62 to 66 new restaurants in 2025 with a same-restaurant sales growth target of 6% to 8%. And aims to expand its presence in markets such as South Florida, Detroit, and Indianapolis. The company also highlighted its new loyalty program, which has led to a 230 basis point increase in loyalty sales, and its ongoing investments in technology, including a kitchen display system or KDS, set to expand to 250 restaurants by the end of 2025. CAVA earnings forecast. Next quarter's earnings estimate for CAVA is 13 cents with a range of 8 cents to 17 cents. The previous quarter's EPS was 5 cents. CAVA beat its EPS estimate 75% of the time in the past 12 months, while its overall industry beat the EPS estimate 60.22% of the time in the same period. In the last calendar year, CAVA has outperformed its overall industry. CAVA sales forecast. Next quarter's sales forecast for CAVA is $327.10 million, with a range of $306.50 million to $340.70 million. The previous quarter's sales results were $227.4 million. CAVA beat its sales estimates 100% of the time in the past 12 months, while its overall industry beat sales estimates 56.91% of the time in the same period. In the last calendar year, CAVA has outperformed its overall industry. If you compare it to its peer performance on the chart, the one-year chart shows CAVA is still up 32%, outperforming others. Here are some analysts upgrading on the stock. A 5-star analyst recently upgraded CAVA stock's rating to buy. John Ivanko, a JP Morgan analyst, upgraded CAVA stock to buy with a price target of $110, suggesting a 29.9% upside. He highlighted the company's strong growth potential driven by expansion efforts and sees its valuation as attractive after a 40% stock price drop since December. Ivanko predicts CAVA could surpass its initial goal of 1,000 locations and possibly reach 2,000 to 3,500 stores by 2043, leveraging its multi-market expansion model. He noted CAVA's early generation of free cash flow and its focus on improving sales, profits, customer experience, menu options, and operational efficiency as critical factors for long-term success. Bank of America analysts are optimistic about CAVA Group, initiating coverage with a buy rating and a $112 price target. With shares trading at around $86, the firm considers the recent stock pullback due to consumer spending concerns as a favorable opportunity, emphasizing CAVA's ability to maintain high returns on capital. They compare CAVA's growth potential to successful brands like Chipotle and Texas Roadhouse. Operationally, CAVA has room to improve its margins, which trail behind Chipotle due to higher labor and occupancy costs. Efficiency gains from increased sales volumes, process improvements, and technological advancements like its connected kitchen model could strengthen margins. While CAVA is targeting 1,000 domestic stores, Bank of America believes the U.S. market could support more than 2,200 locations, potentially reaching up to 1,400 stores in its top 20 markets alone, aligning with the density achieved by peers like Chipotle. Another catalyst, S&P 400. Addition is a turning point and mandate for index funds. CAVA is entering the S&P 500 Midcap Index automatically forces S&P 500 Midcap ETFs and mutual funds to acquire shares. CAVA stock is already included in the Russell 2000 and the Russell 1000 indexes. Based on the S&P 400 Midcap allocations, index funds and ETFs would theoretically have to purchase between 4.5 million to 6.8 million shares of CAVA. This estimated range is based on a $10.22 billion market cap and 0.41% weighting in the $2.5 trillion S&P Midcap 400 Index, which is a market cap-weighted index. The weighting percent is based on CAVA's market cap divided by the total index market cap. Is CAVA stock a good buy right now? CAVA Group continues to demonstrate strong growth potential and resilience in the fast casual dining sector. Despite recent stock fluctuations, analysts remain optimistic about its long-term prospects, citing its innovative menu offerings, revamped loyalty program, and operational improvements. With plans to expand beyond its initial target of 1,000 locations, CAVA is poised for significant growth, potentially reaching over 2,200 stores. Its ability to maintain high returns on capital and improve margins through technological advancements and process efficiencies further solidifies its position as a promising investment opportunity. The company's strategic initiatives and market adaptability highlight its potential to become a dominant player in the industry. We believe CAVA is a buy now and own for the long-term opportunity, given its strong fundamentals and growth prospects. Our price target is $130 in the next 12 months. A good entry price is $85 to $88. What are your options on the stock? Should you buy now or wait for another pullback? If you want to learn more about your favorite stock, please let us know on comment. We do our best to create the content for you. If you find any value in this, please smash the like button and subscribe to the channel. It really helps us to keep working. Thank you for watching and see you in the next video.